that is what leads to there being slow processes. So within large corporates, you often have, you know, first peer review groups, then business case groups, and then it goes to steerco, and then it gets approval. And, you know, all of that lead up takes a long time. And while there's no real burning need, it all seems okay. So the world was trotting along, talking about topics of digitalization, bringing in new products. You know, what about the new entrants into the market? They have some cool features, the Revoluts, the N26, the Lemonades, and yeah, we'll get there. And then the competitors and the shareholders are talking about improving business performance. It was all trotting along nicely. Always for the corporate, a good reason why things are taking long and why it needs to be done properly. And then in March, the proverbial shit hit the fan, in the sense that everything went into lockdown. And it completely changed the way customers behaved and companies behaved. To give you a very high level insight into like the effects that you don't read about in the news, right? So at many insurers and many large organizations, you have call centers or teams dedicated to payments, meaning that's where you can call, they can take your payment details to accept payments. Now, those are set up in data secure environments. It's access control offices. They cannot undock their PCs. It's all secure around payment data collection. So in PCI DSS compliance, ISO 27001 compliance requirements around management decisioning, all of that works. And suddenly everybody had to work from home. So everybody went on this offensive to make it possible for people to work from home, even the people from the call center. The problem is now they are in environments that are not data secure. So actually they're not allowed to accept customer payment details. Something as simple as having a call center agent work from home instead of from the office meant that a part of their role, a critical part of their role, they weren't able to execute anymore. So the solutions that you needed to find now is that, well, you still need to collect money. It's very strategic for the company, but somehow you have to make a plan in 1 or 2 weeks. You don't have 2-3 years anymore. And this is where these processes of how things are approved, how things integrate in your IT system really started to be exposed as a fundamental business problem, even business continuity problem. Just the example of being able to collect premiums for people who would normally phone in is a business continuity problem. Add to that, I mean, one good example is the German market. Germans fundamentally used cash. Those who have traveled in Germany will know that most places you went to did not accept card. Like you would go to like a burger restaurant with like 10 friends, and then you would have to pay cash, right? It is and was a cash culture. And no matter what digital initiatives were driven, even by Apple Pay and you name it out there, that society has not really changed, which means adoption of digital payments and alternative payments has been extremely slow, to such an extent that even SEPA direct debit, meaning just Lastschriftverfahren, just setting that up, was a problem because people still preferred to transfer the money to the insurer. They'll be like, I'll log into my bank account and send you the money. Like I'm not even setting up a direct debit mandate. Now, within probably about a month, the behavior of the German population had completely changed. Money, physical money, was becoming dirty and disgusting. So you had all these companies who never even knew how to operate point of sale systems had to suddenly get some, right? They had to, bakeries and restaurants suddenly had to get terminals because people only wanted to pay by card. Suddenly, you also had, even for larger organizations, as these customers have now become used to this newer transaction and it's caught up to the rest of the world, they now suddenly demand it from the insurer and everybody who've never had to deal with this. They were always okay to say a customer doesn't want it. And now the customer wants it now, right? They don't want it in 2 years. And that has proven extremely difficult at an operational level for organizations to absorb. And then as the companies were trying to cope with this pain, let's call it, came the next wave of problems for the market, and that was Wirecard. So those who are not familiar with Wirecard, it's actually a spectacular story. So Wirecard is what is called a payment service provider, a really end-to-end PSP. So what they offer companies is that across the payment value chain, all the services, meaning that you can choose from many different payment types. So you connect with us, we will go get the money, we will do fraud checking, you name it, manage the money. And they have two core services. And those who are maybe not familiar with payments, I think there's two main roles you should be aware of when it comes to also cards. It's the concept of issuer and the concept of acquirer. So the issuer is that company that gives you your card. So if you get your card, that will come from the issuer. Now, most of the time it'll be bank branded, but that doesn't mean they are the issuer. So for example, in Switzerland, if you get a credit card from UBS or Credit Suisse, the issuer is Swisscard, right? Or Corner Card, like they're the. So these are the issuers, and essentially their role is that they have created a token, like the card with a number says, I know who is attached to this, and this person can use it to identify themselves on the payment network and spend money, right? So this is where money is held. And on the other end, you have the acquirer. Let's call them the bounty hunters of the shops. So they are the ones that the shops, when you go there and say, I want to pay, they are the ones tasked with going to get the money. So I have to now get it from the person who showed me the card and bring it into the company's bank account. So somebody like a Digitech or Swiss Airlines or Generali will have an acquirer. So when a customer says, please, I want to pay with this card, they go to the issuer and said, is this the person's name? Does he have money? If so, this is the reason why I want it. Please give it to me. And they take it back and put it into the account for the company they were doing this for, like be it Digitech or Swiss or whatever. Now, Wirecard offered both those services, and the most affected one was issuing. So they were issuing cards. So you were getting very cool cards. The story behind Wirecard was inspirational. They were grown only in the last 10 years to be a DAX company, like on the stock exchange, was spectacular. And everybody liked working with them because they had new technology stack and people switched over to them. And one of our insurance clients in Germany spent 17 months, I think it was, integrating Wirecard and finished in February. And they were so happy and proud that they had now the deployment finished. And along came June, where the whole Wirecard, what you were going to call it, charade exploded. Turns out that they were making up money that they didn't have in accounts that didn't exist. And what you would have read in the press is all the financial fraud. So basically, at the core, it was they said they had accounts in Indonesia and other Asian countries with basically $2 billion in funds to cover all this transaction volume. And they didn't. They literally made up those papers, right? And the signatures that didn't exist. The second piece that they did is when they reported on their financials, they double counted money. So in payments, that money between acquirer and issuer that needs to move, they are essentially the technology in the middle. And they counted all that money as their revenue. I mean, imagine some guys like, I'm picking up the money from that desk and bringing it there, and then said, like he's bringing up 100 euros to bring from that desk to that desk, and he gets paid €1 for doing that, but then says his revenue for the year was 100 because 100 went through his account, right? So all in all, the major piece in the beginning was financial fraud. What people don't see is the operational problems that this has created. So you have people out there with cards that were issued by Wirecard, and Wirecard had to close down. That means that card is no longer accepted in the ecosystem. So if you go into the ecosystem trying to use a Wirecard card, nobody will recognize that. And even if an acquirer wants to go and get money from there, they'll be like, sorry, this is shut down. Meaning that there are millions of people out there who can't use the money that they have there, which is obviously a big problem, which means you have to replace that card with another card, which seems simple enough, but you also have to move the money across. And that money is currently being held by the regulatory entities to protect the policyholder, in a way, holding the money away from the policyholder to protect them, right? It's really bizarre what is happening at the moment there. Now you have a situation where all the clients of Wirecard need to go find new partners. Now, they had probably close to 10,000 clients. And there are enough other PSPs. All of that is relatively simple, but there are just not enough IT slots out there to accommodate all 10,000 people. So even across all the PSPs that are out there, if you wanted to say, yes, I want to sign a deal with you, you can sign contractually, probably 10,000 deals. But to onboard all of these companies with the new PSP, there's just not enough IT time to onboard everybody in the next year. And in fact, there's maybe only capacity around 30 to 35% of all companies that were Wirecard clients will be able within the next year to find a new payment service provider, meaning around 60 to 65% of companies might not be able to collect money in the next year, which, as you can imagine, is a big business continuity problem. And there's nothing they can do. They can throw 100 million at it. This is not enough space. Like 60% of people will not be able to get new services. And this is where together it has really fundamentally exposed something that everybody in the large enterprise industry knows about and nobody likes to talk about, is this how difficult it is to onboard new service providers, because one, it takes forever, two, it's very expensive. And it's also exposed the thing that was always sort of captured in risk management matrices, but never really considered as realistic, is single vendor dependency. So you have companies, because they can only deploy one connection, did so with Wirecard. And now they have no connection. And even though it was a listed company where you think there's no chance that they will go bankrupt, it just proved again the 1 in 200 year event, they still happen, right? The thing is now, how do you address this going forward? Now, what is very interesting to share is the fallout from this is stuff that you would not traditionally see in the market. So what is interesting now, when this happened with Wirecard, the Europe over, possibly even the world over, the person who was shouting the loudest in the insurance and finance organizations was the chief risk officer. Why? Because he wanted to know whether they are clients of Wirecard, running around finding out from everybody, are we Wirecard customers? Are we in trouble? And even for companies that are not Wirecard clients, the next question is, how are we set up to our existing providers, and what if they fail? So now you have all this activity happening on a risk level, which has nothing to do with commercials, meaning it becomes also hard to work on business cases, because onboarding a second or third payment service provider has no monetary benefit in the short term, right? It's not like you can say we reduce the fees that we charge, or we even offer new technologies. Just a cover my ass kind of activity. And these kind of activities are really difficult to get through approval processes in insurers. So at the decisioning level now, you have a lot of senior people on the one side seeing the problem that could happen, on the other side having to approve a project that they feel really painfully disgusted to approve because there's no immediate commercial benefit. And this is something that the industry now needs to acknowledge and really address head on, right? And is, how do you cope in a world where speed is important? Like, it seems to be changing all the time. And it's not just payments. I mean, payments has new technologies emerging all the time, new providers. You have mergers and acquisitions. I mean, on that one, as an example, there's a client who had a payment provider and was happy and had no plans to do anything. And then this payment provider was bought by another payment provider. And within 6 months, they were told, you have to connect to these new APIs or this connection because we bought them, we're decommissioning the system, and you have to go through us. So suddenly they had a 6-month project, cost them about $300,000, and they wanted to do nothing. It was just because somebody else acquired another company, right? So how do you cope with this kind of world? It'll be the same for data analytics. The data sources change, how the systems communicate change. And now is the time where companies are dealing a lot with the architecture question, like how do we build our IT system? There's a new urgency in sort of consolidating IT systems, unifying IT systems. You see many companies trying to deploy API layers above their system to make it easier to connect external systems. And it's been quite a volatile period for companies in a time where you have a health crisis to deal with, with your employees. You have to find new operating models for everybody. You have to keep the company running, and you have to watch costs. And in all of this time, you actually have to spend more money to be robust coming out of this. And this is where we see a lot of activity happening right now. And I think payments in that instance is really interesting because it is something that is fundamentally strategic to every company. Like it needs to work, especially insurance companies, which is essentially a contract of money in, money out. As we know, just by our loss ratios, sort of if you have 100 coming in, you expect about 95 to go out, right, in claims. So it's a environment that is very critical for the business to function. So it cannot be ignored going forward of how how do you address this from a provider perspective, technology perspective, but more importantly, a coping, future-proofing perspective. So this was sort of a bit of an insight into how Corona has sort of affected the world behind the scenes, and how this will now have quite a big impact on how products are provided, how services are provided. So you might find that as you call your companies now to maybe do stuff around payments, it all seems just a little bit more difficult because it could be that the call center agent you're talking to no longer sits in the office, but they sit at home, restricting some of the stuff that they can do. And what I think is relatively interesting is your immediate reaction is that, wow, this is the time for neobanks or like the Revoluts of the world, the new kind of solution providers. And I don't know who of you have been following this space, but it's actually been a really bad time for that world, right? You see in the UK, most of the neobanks were excluded from distributing the government aid to people. Only the high street banks were able to do that. So all these billions that were going out to the population in terms of support, all was out. The neobanks were out of the loop, which means people went back to the high street banks because they wouldn't get the service from the neobanks. You have very similar experiences now that a lot of these neobanks and neo services relied on newer technology stacks like Wirecard and built their solutions on top of that, which has eroded some trust with these companies, and that they also had to operationally shift in the background. So while you think intuitively this will be a really great opportunity for all the new market entrants, it's actually been the exact opposite, and it's been really painful for them to try and cope. And if you look at them news now around payments, you will see all the earnings warnings from Starling Bank, Neo, N26. Okay, they have like employee problems as well, but you have Revolut, who's posted massive losses. They're all really, really struggling in this time, which I think is something that surprised a lot of people. And I can tell you it even has surprised the people at Visa and MasterCard who we deal with, who are just trying to keep the system going. The impact of this also maybe to notice is sort of the first figures are emerging from this all this crisis is that, and I combine these two. It's the health crisis around coronavirus as well as the scandal around Wirecard has led to just at Visa a 42% reduction in earnings, right, for the year. And that is just around 6 months restriction of spend. Now, the knock-on effect of that is very big, right? So yeah, that's just Visa losing its fees. Now you can imagine like a lot of banks and even a Revolut's business model is built of earning fees of card fees. So if that's going to be reduced by 42% on Visa side, you can imagine what that means for the Revoluts. And what is very interesting, there was recently an article that was an interview with some marketing dude at Swarovski. And they were talking about how they have this pain that the longer people are not spending money, the less connected they are to the brand and realize they can live without the luxury, right? So for example, Swarovski has all these collectibles. So you buy a series of whether it's Star Wars or Frozen, or there's like a animal series, and people buy one a month kind of thing for like 130 francs. And now they haven't bought it for 4 months, and now they are okay with not continuing the collection. So the lifetime customer value for Swarovski has absolutely imploded on their core business. And you're seeing the same with things like Revolut that seem to be at this intersection of luxury goods and finance. Like Revolut is seen as like the luxury good in payments, right? And card. So now the shininess has gone away, and they will have to invest heavily and have to do very hard work to get the customers back. So I've now waffled on a lot about the payment industry and what is happening there. I think it's still very robust. I think you will see a fundamental shift in how companies look at payments as a service, but also a lot of mergers and acquisitions I think you can expect over the next 2-3 years in that industry. Just from a sustainability of the business model, there will be mergers and acquisitions. And I think from a technology perspective, I would be surprised. I mean, this is more a personal opinion. If you see new payment types coming out, like wallets, or something quite different to wallets or cards, like a new payment technology, and there will be a much bigger focus on end-to-end service provision to try and sort of cover the entire value chain of payments for companies. So with that, I will take a quick break and see if there are any questions. Is there anything specific you would like to know more about, or is interested you've seen, and we'll happily try and answer those. Gabby,
Yeah, we
Doris?
had yes. Go on.
Over to you to moderate. So.
Yeah. We had just one question also in the chat, but I think that you already answered it. It was the question, what about Revolut?
Mm-hmm.
And what is the situation there? You already answered it. And we have another question from Ramon, who is asking, do you expect companies to continue investing into payments? Payment integration to prepare themselves for a second wave and upcoming Christmas.
So I think fundamentally what we, I'll answer Ramon's question first, and then I'll actually go back to Revolut. So the second wave topic is a very interesting topic because I think we have not seen so much additional reaction from corporates because of the second wave. I think it's because there was a significant reaction around the first time, right? So I think the second wave doesn't feel nearly as bad as the first wave. It just seems as a continuation and as being a tool used to justify the acceleration of activities, right? Because as we know in corporates, the faster you want to do something, the more expensive it gets. So this is more used internally to sustain the support to fundamentally change topics, drive home that business case, and probably unlock more funding to actually do stuff more fundamentally. But I don't think companies actually see any sense building up own payment capabilities. Apart from the Wirecard people looking for jobs, there's nearly no payment expertise available anymore in the market because everybody's just trying to cope with what's happening. So for insurers to attract payment expertise is nearly impossible. So even where they want to do it themselves, it's not even that there's nobody to do it for the price that they want. There's just physically nobody there to do it. So unless you want to hire Wirecard people, you will have a really big problem in doing that. Now that for me is a bit of a segue into I'll extend a little bit on Revolut, is that what the health crisis has really done, I think, to all organizations across the board is have everybody not stop doing business, but only focus on core activities. So any side projects that seem to be nice to have over the next years have been paused, but none of the core activities have been paused. As an example, as an Imburse, our work has not slowed down around the coronavirus time. Payments needs to work. It's not like I wish it worked, but a lot of like analytics capabilities, like AI, ML projects and blockchain projects that companies are doing have all been paused because those are nice to have. Those are not fundamental to the company running. And you see the same happening at Revolut. Revolut is an amazing product factory. So they started with an international travel card, then they came the premium account. Now they come with the insurance integration. The problem that they have now is that all builds on the expectation that they will have more and more users spending more and more with Revolut, and Revolut specifically targets the international traveler. It's their core market. And the coronavirus has absolutely devastated that part, right? It's just unlucky market segmentation that they're going after. That does not mean Revolut will go bankrupt. I mean, they're a big organization. It just means you will probably not see as many new things coming out of Revolut as you would be used to seeing. And they even have to pivot and look at their business model and say, how do we become more sustainable beyond that? I see there's some more questions. We talked about integration. Casara? You talked about integration into IT landscape for the insurer. As a young startup, how do you recommend to integrate into an insurer system? Is integration even required at the start? So yes, thank you for that question. And it's actually something we fundamentally built our business on. So one of the big insights we had when we did our pivot and saying, when we were dealing with AIG, trying to get real-time payments for our clients, they said to us, if we have to do it, it's 15 months, $500,000. And we were quite desperate. And their comment to us, which stays with us still today, is if you want real-time payments, do it without touching our core IT system. It's the only way. And that is the only way you will fundamentally build a scalable solution that you can scale across many large organizations. You have to build something that requires no integration into the core IT system, because that's where the problem starts. And for us in payments is you have to map the payment processes. So you're basically taking spaghetti into a system. And when you want to move to a new system, you're taking spaghetti into the new system, right? The only way you keep that clean is by not having spaghetti in the system. So it is hard work. It is a paradigm shift even for companies to absorb and for business model to absorb. But it is absolutely critical in any way possible to stay away from core IT systems. So just a very quick insight how we do that, right? So the solution we have brought around payments is to realize also one major thing. For most companies, for all non-payments companies, payments is absolutely strategic, but not core. Meaning it must work and it must be cutting edge, but they have no time to build it or maintain it. Like they don't want to. It's not seen as a core IP. They're not proud of their payments team and want to build a big payments team. It must just work. Now, when you do that, you have to find a way to simplify it. And the way we did it is to say payments for companies is actually only 2 points. They want to initiate their payment and they want to report that it worked. Anything beyond that should be a setup kind of piece. Now, conceptually, that sounds simple enough to say you either send us a signal to collect a specific amount in a specific market or pay out a specific amount in a specific market. The fact that sometimes it's 1 billion euros, sometimes it's one, whether it's in or out, that's inconsequential. You only once you know what you want to do can decide which provider to execute it on. Do you need interbank system? Do you need voucher? Right, that comes later. Now, conceptually, you might get there relatively easily for your service. Where the stuff gets really difficult is when all the regulation kicks in. So if you think about it, all we are is we are a messaging system. And that's the most scalable component. But that means you have to move data around. Now, when it becomes personal, like customer data, then you have GDPR topics. And at the large enterprises, you have compliance and IT security on your ass, right? About how that works. Payment data, right? Then you become a target for hackers because now it's great. Like there's one thing having somebody's personal details, but something completely different having a card details, right? So you have to ask yourself, how do you manage that so that the organization feels comfortable using you as a middleware? And we do that in a bit of a different way in that we basically try to not hold that data and build our service on what is really our core, which is, for us at least, connecting to the payment world, not holding hordes of data. So I think really to answer that, if you really want to build something scalable, try and stay away from core IT systems as much as possible. And then there's a question from Gabby regarding the customer. How were they affected with all these changes? And if they were, how can a company facing this issue can manage to make the end customer feel comfortable and safe? So how were they affected? I think many customers didn't even realize that they were affected, which is, I would say 80% of the customers will never feel anything happen here. And that's luckily due to companies making some kind of plan. It doesn't mean that it was absolute absolute chaos in the background. So the main pieces that were affected, where customers were affected, is where the issuer went bankrupt, like Wirecard. So you have to get the customer a new card. He cannot use the card that he has. And then with us, even if it takes, I don't know, like a week to get you the new card, that means you have a week without a card, something you might be very used to. The second piece is you might be inconvenienced across your customer journey in that you might have to re-enter payment details you had previously saved. One, because you just have new details. Two, you're maybe with Swiss card where you didn't need to get a new card, but the provider has changed payment service provider, say away from SIX to Datatrans or somebody like that, which means SIX cannot send the saved customer details to Datatrans. It doesn't work. So from one day to the next, you have a new service provider, and suddenly you will have to ask the customer to input his card details again, just because you have to save it again. So I would argue that the end customer is a bit at arm's length. It's only those directly affected will even know. The problem is that maybe they're not affected now, but there's potential to be affected down the line, because those who want to pay by phone or there's an emergency component right when they need the money, they cannot get it. That's one topic. The second one is you have an insurance policy, you need to pay, and now somehow you cannot collect the payment data the way you used to, and the insurance system doesn't care. It only works one way. You either put the details in or you don't. So this is something that might still come down the line. We'll have to see. We have something from Jason. Jason asked, I've recently seen a number of global financial institutions starting to look at smaller e-money payment service providers. To what extent do you think that financial institutions will build their own capabilities in order to compete, or do you think that we can expect lots of market consolidation over the next few years? So, Jason, I actually think the market consolidation will be a massive player here. I think there are so those who don't know how the payment market works, it might be surprising to you, but it's surprisingly seedy. So most new payment providers, because payments is a volume game. So if you want to set up a processor or so, they have to find a way to make a lot of volume because they earn less than a cent or 1 cent per transaction. So you have to really drive volume. And the only industry that is really willing to try out new people will be gambling and the porn industry, because they get from an how do you say, like the most traditional players will do sort of an assessment of the business and see it as risky, so they have to change providers all the time to do their dodgy dealings. And this is always a very big piece where payment service providers are growing up relatively quickly. And it's the same story for Wirecard. So don't think like all the big players are exempt from this. This is how they operate. So now with a big collapse in travel and even e-commerce, so I mean, Amazon does well, but generally there's a retail collapse and so on. It's just not sustainable from a volume perspective anymore. So there are many businesses that were launched that just are not sustainable, but have really cool tech. So the newer ones have really good technology stacks, but not the volume. And the older ones have the volume, but not the technology stacks. So I think you will see a lot of mergers happen just to acquire technology. And then you will have less of these providers again. Now, will insurers or financial institutions go on a similar path? I think there's a general movement to try and find a way to solve this, right? So the question is just, where do you focus your energy? Do you focus your energy on building a payments ecosystem, or do you build your API layers, like to improve the connectivity of your system? And I think here you just see different approaches. You will have, I find, smaller insurers much more open to building not only the connection, but also some capabilities around payments. They generally have newer tech stacks. So onboarding 2 or 3 PSPs is not such a problem for them. Whereas in the more larger incumbents, you will see a much bigger focus on addressing the core IT components and then finding the services to connect in. And that can be smaller e-commerce solutions. So in one of our clients, they went from having one payment provider for all of Europe to connecting local providers in the markets, because they don't care about integration anymore. It carries no cost or IT burden. So instead of having like a world line across Europe, they now have a Spanish PSP, a German PSP, and now they are more open to having smaller ones because you can also set up backup PSP. So I think it's something that's still emerging, and we're only seeing the first indications of it. But for me, I think it goes in these two ways. Do you build out your core, or do you build out the real integration ecosystem functionality? Hope that answered your question, Jason. Any more questions?
Hi everybody, this is Pietro. It's not actually essentially a question, but it's more a consideration that I've been doing in the past month that connects to some of the examples that Oliver raised. So it's just more a food for thoughts, or um, also for other in the call if they have thoughts around it. So what can be the implication of some of the things that you described, not only in the payment space, but more generically for startup? You made a couple of examples. You made the example of Revolut that has been struggling mainly because they were unlucky on the customer segment that they were targeting. A lot of neobanks that struggle because I would say the Imperium fighting back. So all the money that were given to SME was then distributed to the traditional bank, and so they were taken out of the possible revenue generation. And on the other end, you show specifically for payments how things that are important but not core actually create a window of opportunity for startup. So my consideration it is if one of the implications of COVID cannot be also a kind of paradigm shift on where competition for incumbent can come. So far, it has been a lot more, let's say, digital attackers attacking the value chain of the current industry. So you take the Lemonade or you take the Revolut. While the one that seems to be more successful, or now they have the opportunity to be successful, are startups that actually are attacking component of the value chain, but across industry. You take payments, each and every industry in a way or in another is doing transaction. And if you can shift like 90-degree the way that startups are looking at how to create business model, this is not anymore attacking the big incumbent, but is cutting across different capability which are not core. And again, it's just a thought, and I don't know if there is any comment or if it is totally crazy what I'm saying.
No, I mean that's always the dream of a company, to be vertically and geographically agnostic, because then you are truly scalable. I think that's the dream of any kind of startup coming up. But I think, as you mentioned, that can come with focus. I think there's a lot of companies who try to do too much too quickly. And what you actually see now in the whole communication around InsurTech and FinTech is it's now moved into a collaborative space where a lot of the incumbents want to work with startups, where it's clear that they really address a part of the value chain and that the incumbent can actually leverage them to grow themselves and not to compete. I think there's that piece. I see there's a question from Andrea. What would you recommend to a small company in order to protect themselves from circumstances out of your control, such as COVID? Wow. So I think it's the one piece that, and I can really just speak as a startup here, where we are definitely a small company, is that one thing people like to recommend to you, and that's the investors and your board, is like focus. Like, don't do too much, right? Focus on one customer segment, be successful in this. And what I feel as shown by COVID piece is that can work out really well for you or really badly, right? So if you focused on the right part, it's amazing. If you focus on the wrong part, that is absolutely it. So we had, obviously being in the startup industry, got to deal with a lot of other founders, some in travel, incredibly smart people, amazing teams, amazing product, and it all means nothing because the entire sector is broken. So I would say that you have to fight your urge to focus too much and have a view on what else is out there. Now, I don't have a silver bullet answer here, but I feel like the mantra of focus should change to focus on delivery and build out a big vision, right? So you should have a vision of your business beyond a very specific area. Otherwise, you have to accept that you are a niche solution. And you then have to consider how do you cope within a niche environment in certain certain circumstances, which I have not thought through yet. So I don't think I can answer that for a niche player. But in another way, you should be saying, my focus purely comes around execution, not around conceptualization. So if you have no view of your company where even in 5 or 10 years, you can be relevant beyond the one thing you are doing now, you could run into this problem. If you know where you could be, it allows you, when you hit that wall and something like Corona comes in, you already have a view of where you could go to and do something, right? You're already on the way there. You might have to invest some time to get there more quickly, but that allows you a bit more flexibility and survivability if you look into that. So I would say that I could recommend, and that's something we try to implement as well. I think Ramon has another question. Is the risk problem also being addressed with instant and real-time settlement payments? I think instant payments is for me a situational requirement, right? So not every situation requires an instant settlement. And for those people who do, again, from a payments perspective, payments in the end is an accounting game. Somebody has money, somebody wants the money, and this needs to appear on the books. Now, when you sit next to each other, if you're in the same bank, you are on the same ledger, which means I just move, even like, I mean, imagine me and Gabby are both at UBS, and I need to send Gabby 100 francs. Then in UBS's accounting, this 100 francs, nothing happens to it. It stays in UBS, and they just have to change the number that appears to Gabby by more than 100 and the one that appears to me by less than 100. So settling it is easy. It's real time because nothing ever happens. As fast as you can change the visual number to me and Gabby, that change has taken place. If you have to move that money between Credit Suisse and UBS, luckily they're in Switzerland, but money literally needs to leave UBS, appear in Credit Suisse's account for them to be able to say, yes, the money is here. Now, if they want to really offer real-time, which doesn't physically exist, they are taking the risk and say, I trust UBS enough to that if they say they have sent the 30 francs, I will get it. So I make it appear in Credit Suisse immediately. So again, it's an accounting game, and the real-time piece is only by how much risk somebody is able to take from the counterparty and say, I believe them. Now, if I transfer money from my UBS account to Bank of America in the US, that distance is even longer, which means that if Bank of America wanted to accept or enable an intercontinental real-time payment, Bank of America would have to accept and trust UBS enough to do that. And as much as they like each other, they don't trust each other. So if you want to do real-time payments, you have to solve this trust piece. It's a long way of answering that. I feel instant does not address risk. Instant addresses customer need or business need, right? So if I am in America and I need to go to a hospital and pay for the hospital right now, it's good to have it instant. If I have a car accident and my car is damaged and it needs to go to repair and I get a rental car, there's not nearly the same urgency to get the money, right? So I would not link risk and instant payment too closely. Also because it has a second order effect, which is cost. So in payments, you have 4 main variables of a transaction, saying that it's speed, it's cost, it's reliability and security. And one of them is always more important than the others, and they have inverse correlation. Means if speed is the most important, you want it to be the fastest payment, it's most likely not going to be the cheapest, or possibly if you want it to be really cheap, it will probably not be secure or reliable, right? If you want it to be the most reliable, it probably is very secure, but it probably is not cheap or fast, right? So across these 4, you always have to have some trade-offs. And hence coming back to risk and instant, it's probably that trade-off. So the consideration of instant should be situational. Do I need it to be instant for the business case? And am I willing to accept the risk that it happens? So it's a long way of hopefully answering the question, but I don't relate instant to risk. It's just a customer need. Yes.
Yes, Cedric speaking. I'm sorry to just jump in the discussion because I'm attending with my iPhone and it's difficult to me to type the question.
No problem.
So, and I just took the opportunity because you were mentioning about transactions, the different bank and the way that they are operating. And I have a question so far with all of what you said is regarding the future of payment. Because we discuss a lot of what we are doing now, what will be in the future. And me, with the COVID situation, I was expecting a bit more adoption on the cryptocurrency or like the blockchain technology. And I would like to have your view on that. What's for if blockchain and cryptocurrency is the future of payment, and how do you plan to integrate it with your current company? And if not, what's your view on the future? Because me, just to finish, my dream will be to be able to go outside without anything and be able to pay anything that I want with a single code, single digit that I have in my mind, for example.
Yep. So that is the dream. And again, here comes the trade-off, right? So when you have a single code, how do you handle security and reliability? It's these issues like, what if you lose the code, if somebody takes the code? So where's the anyway? So we won't get into that quite yet. But before we get too deep into it, so blockchain and crypto, I would separate these two in the sense that blockchain is the mechanism by which you exchange I would argue the contract information. It's basically what an acquirer or an issuer is right now, finding out what is the truth in the system, who has money, who does not have money, and how do I get money from one to the other and have a record of it. Crypto is a payment type that is out there by which value can be transferred. Now, be it Bitcoin, be it Ethereum, be it whatever it is, right? I would say it is equivalent to credit card vouchers. It's just a different mechanism by which to do it. Why have you not seen so much adoption? And just to be very frank here, is because one, the people making the decisions at the large enterprises, one, don't understand it, and two, are scared of it, right? Now, to give you an example of where the fear comes in, is that when you come to insurance and somebody takes out an insurance policy for 100,000 euros, then you are contractually obligated as an insurer to make sure that once the transaction is done, the customer has 100,000 euros, not 100,000 minus the transaction cost. That transaction cost falls to the insurer. Now, up until more recently, without stable coins, there was still a volatility in that, because processing a crypto payment can take up to 3 minutes. Even a 1 cent volatility, even a fraction of a cent volatility, meaning that in the actual account appears 99,999.99, it might be insignificant, but it is a technical breach on regulation. So until you cannot address this with the corporates, they will not want to take that risk, because even though it's a cent, the regulator might nail them for it. And it can go the other way. The customer could get 100,000 and 12 cents. Nobody will complain then, but when it's less, they might be nailed for it. So there's the fear element, not understanding it, hence no adoption yet. And the second piece is that my personal opinion is that people make too much of blockchain, in the sense that when you talk about internet, not everybody who uses the internet understands TCP/IP protocols. That's how the internet works. But 99% of the world has never heard the word TCP/IP protocol or knows how it works. And I feel like in blockchain, everybody tries to explain to everybody in the world how blockchain works, whereas it should just be in the background a way of running a system. The fact, in the end, I am using my card or payment. The fact that it's run on an Oracle server or a IBM server or a blockchain should be irrelevant to 99% of the world. So what happens is that the concept of blockchain is, in my view, blown way out of proportion in terms of its significance to explaining to everybody, that the decision makers in large corporates who are of the older generation and don't understand it basically kick back against it. They're like, why is it different to what we have now? What we have now works. And hence you're creating this like delay in adoption. And the worst thing you can do with large companies is force them into a decision into something they don't understand. Large organizations such as insurers and banks will rather spend 10 times more money on something they know to try and get it to work than spend less money on something brand new that they don't understand. It's the psychology of large enterprise. Makes no sense, but it is what it is. So in terms of the future of payments, I think what you will see is that the technologies themselves, the credit card providers, the e-wallet providers, will move systems possibly onto blockchain where it makes sense to them. That is just how their technology works. You will have a code, you will have a card. It really doesn't matter how you access that, but companies will move their tech into a blockchain environment. We, for example, ours doesn't run on blockchain for, again, a very psychological reason that if you tell the company it runs on blockchain, they're already worried about it because they don't understand it, right? So it's are we against blockchain? Absolutely not. Are we looking concurrently at how to build our system on blockchain? You bet we are. But it's a psychological game at the moment with large enterprises. To get just a little bit more specific on my personal view on future of payments is that the future of payments is not so much in the actual physical appearance of what it is. Like, I think in future, it's rather irrelevant whether it's card or e-wallet. It's what, Cedric, was in your dream. Can I have one identifier with which I can transact anywhere? So at the core, the future of payments is how do I exchange securely my information that somebody can get the money that they're due, right? This means that in today's world of PSPs and tokenization will not work. For example, Braintree creates a token that I can use everywhere, but it only works in the Braintree environment. So how am I building this identifier in a way that I meet regulatory requirements about data privacy and security around PCI DSS protocols, around payment data? And that, I think, will be the trick. The people who figure out or become the central point of truth that everybody can rely on and transact on will start moving us into the future of payment where you have the single identifier, be it a code, be it your phone number. I just don't know what that's going to be. I just have no feeling for what it is, because you also have customers have such a variety of what they want to do. And while we try to move into this world, trying to solve actually more the data communication problem, you have other forces working against it. So I don't know if you've seen in the UK, they're very strong with this. Like, cash is still a legal tender. Every shop still needs to technically accept cash, because otherwise you exclude a big part of the population that does not know how to work with digital money. So you have this weird piece where we could probably make quite a big leap into the future, but by looking at society as a whole, it's still very much like I see it as an elastic. Somebody pulls and then it has to come after, and then they pull back and pull you back a bit. And it's sort of in a bit of an elastic fight game that we are at the moment. But Cedric, I think at the core, I believe it's not about crypto. It's not about blockchain. It's about, can you use blockchain to be the trusted mechanism by which to transfer the information vendor independent? Then you have a future of payments where you have your dream of one code. Otherwise, we're going to all have with their local sort of mechanism and card. The last bit I would add to that, Cedric, is maybe something that just popped into my head, is a lot of value today to a company is attached to how many customers they have. So look at like the beginnings of Twitter, Facebook. They were not producing any revenue at all. They were producing massive losses, but they had 100 million, 200 million customers. And the belief is that once you have the customers, you can build a business model. And I think in payments, it's the same. You have to have massive volume to have a business, or you have massive number of customers to upsell products to. So you still have this inherent need by payment companies to be their own brand and build a profitable ecosystem and not just be an infrastructure provider. That was just sort of something that popped into my head.
Yes.
Good. Thank you very much. That was a really great answer, and I took a lot of insight. So thanks. And on your last bit,
Yes?
you make me think about WeChat. because they are building a big ecosystem and they already have all of this. But that will be for another topic on China, maybe in another coffee.
Exactly.
But thank you so much for your answer.
Absolute
But
pleasure.
Cedric, you're not far away, so you're always invited to come over to the garage and have a chat with us, or even with Oliver. I'm talking for you, Oliver, but I'm sure that you will find time for a coffee or for another chat. So yeah, that's not only for Cedric, that's for everyone. So please come visit us if you're in the area of Adliswil or even working for Generali. So come and visit us and have a chat with us, and we can or contact us. You find us on LinkedIn. You find us on everywhere where you get the invitation or where you came to this event, and we are really looking forward to exchange with you guys and to have you also at the next event perhaps. And I thank you very much, Oliver. It was really, really interesting and insightful. It's always interesting to talk to the pros.
Well, thank you for having me. Much appreciated.
Yeah.
And thanks for all the questions. It was really good.
And so it's the last thing that I can do is just to wish you a very sunny, hot, nice last summer day, and then have an excellent weekend.
Thank you, everyone.
Thank you, everyone.
Have a nice
Thank
day.
you very much.
Thank you.
Bye.
Bye.
Bye, guys.
Bye bye.